live stream. What I want to talk with everyone about today is how to start learning to read the story of markets. And today I'm going to talk about a commodity because I oftentimes talk about stocks. I'm going to start mixing it up. We're going to start talking about some currencies. We're going to start talking about some commodities, gold, oil. We're going to start talking about some crypto. I'm going to do a Bitcoin live tomorrow. We'll talk about why I'm doing that. But anyway, let's start talking about how to read the story of the market. So, the story of the market has protagonists and antagonists, and sometimes these groups actually switch, they flip flop. Everybody always wants to think that these strong hands are in complete control, but that is not exactly true. So, strong hands, institutional money, big money, these are all names that go together. Retail, um, lack of a better word, weaker hands just because they don't have the cash flow to be as strong as the big guys. So retail, weaker hands, less knowledgeable hands. These are the smaller guys, right? I'm going to actually take these glasses off because I do. No, I'm not going to. There's a little glare from them. You'll have to deal with a little bit, but it's difficult for me to see without them. So there's these protagonists and antagonists in any story. And oftentimes when you get into markets like we're in right now, which I would say is a speculative trend following market, what you see in these markets a lot are people looking for breakouts, and then the herd piles on and prices go higher and higher, which creates this parabolic sort of effect. And then what follows a parabolic effect is very standard and almost always comes to fruition, which is a return back to wherever that price took off from, and then tends to go a little lower. Something that I've heard a lot of about lately is gold and the story of gold and how it's safe. So what I want to do is I want to walk you through how you can read the story of gold, at least from the looking for the footprint of the big money, big institutions, strong hands. We're going to look for that footprint. We're going to identify that footprint. And based on the fact that we know that this group of people is responsible for most of the movements within the market, we know that they like to buy low. Know they like to sell high. We know that for the most part, they'll take control of supply. So control of the overall, in this case, commodity gold. They'll try to capture as much of that as they can because the more supply you control, the more price you control. So let's go ahead and take a look at gold, and let's just tell the story via our book. Our book is a chart, okay? And let me do a quick plug on who I am and what I do. My name is Derek Miller. I run Promethean Investing. Basically, I created a system. It's a three-part system that allows you to begin your financial and investment kind of journey. Even if you're in the journey, it may allow you to begin again. Once you realize that human emotion is the biggest player in these markets, once you realize that that really is what drives markets, you may decide you want to change what you're doing a little bit, right? We talked about GameStop and we talked about AMC earlier. I assure you, it's not fundamentals or earnings driving those two particular positions. It is supply and demand and cash flow. If you control the supply, you control the price, which means you control investor emotions, that FOMO, fear of missing out. And then also you can flood the market with supply, which will drop the price. You can buy that supply back at a cheaper cost, which allows price to rise because you pulled supply off the market. So once you realize some of these things, you realize that what you actually need to do is look for those the feet print of who is buying, when are they buying, and then you just want to follow them. You want to walk in their footprint, so to speak. The market is like walking the Arctic, right? If you have feet print, you can step in front of you. You don't have to do nearly as much work, and you'll save a ton of effort, and you'll get there much quicker. And you're taking the right route because the route you already know the path. So in any case, it starts with a financial planning portion. This is for lack of better, terminology, it's a course. It's a course that you take. Very easy, get you a financial plan set up, which will include just a brief history of the stock market, what it's meant to do, how to save, how much to save. You'll set up some goals for yourself. You'll establish a savings plan based on those goals. It'll show you how to do a basic asset allocation model From there, you roll into my 6-week course, my VIP mentorship course, where I will go through risk management, I will go through investment management, and I will go through cash management. Tying that all together, by the time that 6-week course is over, you will have a personalized financial plan and investment plan. From there, you'll simply subscribe to my bi-weekly newsletter. I will give you the information as I see it every week, twice a week, and exactly what I'm doing in my 3 portfolios. So you then have the ability to see through the lens of someone who's been doing this for 25 years, 60 hours a week, and is pretty darn good at it. Okay, over to gold. Let's talk about how we tell the story. How do we read the story? How do we find the footprint? Let's take a look at gold. We're going to go over there now. Here we go. We are over to gold. So what we look for, folks, when we are looking for the footprint. Hold on one second. I'm going to go ahead and switch something up here. What I would like to do is, I don't know which one of these setups is going to be better, but I am going to guess this is, you know what? I'm going to go with this. I'm going to guess that this is going to be the best possible setup for this screen share with you, so that you can see the story that I'm about to tell. Forgive me if this doesn't work out. I will put something, a different video up, but I believe this will work out. Okay, so here we are on gold, and we are on a monthly chart. What we're looking for is the footprint of bigger money, of institutional money. How do we find that footprint? We find it in trading volume, trading activity. So there's only one group of people that can create very high levels of trading activity. That is the strong hands, or the institutional money. So what we look at to find that is very simple. It's volume. So we just look for like volume that seems to stand out. Apologize if you hear my dog right now. It's all part of the live viewing experience, folks. Here we have some right here and here. I have a monthly chart up right now. So I am quickly, what we always want to do, everybody, when we're telling a story, we have to see this story from a wide view, a macro view, all the way into a micro view. So we zoom in on it. Okay. So here's the biggest pieces of volume I would say that I can find on here. Just use your eyes. These are the feet prints. So where do these feet print tend to be taking place? At high prices. So as the gold market rose, and it was at $184 on GLD, which is about $1,840, we see 2 large feet print. Those very large free print lead to a price drop back down to around 1,000, 1,100, so $101 on GLD. You'll see a little volume down here at the low, but not very much. Prices begin to rise again. I would say this is the first piece of big volume I see, which is a big footprint. It leads to this next piece of large volume. Once again at high price. What's that high price? Looks like it's about 1920, 192 on GLD. We go to the next large footprint. It is at that same price, 1920. We head to the next large footprint, which I suppose I maybe have skipped one if we want to cover this. Same price, 1870. We come to our current large price. Where are we? We are at 2,200. So we are $300 above where we were at about 2,000, right? So $300 at 2,000, everybody, 10, 15%, right? But what we see here is the large feet print are taking place at high prices. When we have large feet print, feet print, right? Large footprints or large feet print. Large footprints. Let's go with that. When we have large footprints at high prices, what that tends to mean is traditionally selling. This is when big money or strong hands tend to sell off to the weaker hands at high prices. Because who gets excited about high prices, folks? Is it the strong hands, the big money? No, it's retail. They're the ones that love headlines. It is not their fault. It is not their job. They don't have the knowledge that the strong hands have. They can't possibly, because it's not their job. So they tend to make mistakes. They tend to buy when they should be selling. If we look here again, this just zoomed into a weekly chart. Now it really starts to take shape. You can really see that the footprints of institutional money once again are at these high prices because all we did was zoom in on weeks, and you can really start to see how that's playing out. So let me get one more here. We're going to zoom in on a daily. I don't want to bore you here, but I do want you to see that it is all taking place at these same high prices within 10%. And in the world of commodities, and anybody that knows that plays in commodities, within 10% is the same thing as a stock being inside of 0.5%. That's next to meaningless. Now we zoom in on a daily chart, and guess what we see? Look how big that footprint is on our most recent high. Now, I have a question for you. When the headline hit and we hit this high, do you really believe that the guys sitting at Morgan Stanley, Goldman Sachs, Wells Fargo, Merrill Lynch, you name it, Citadel, do you think that they were buying gold right here? You can't possibly think that those guys think that this is a good place to buy. So gold's rallied from 1,000 to 2,200. It's up over 100%. It's up 120%. And if you can't possibly believe that they would ever buy at this price, which means that they're going to sell at this price. I'm not telling you gold is a long-term sell. What I'm telling you is it is being distributed. The supply that has been collected down there at 1,000 is being distributed. Okay, this is how you learn to tell the story and learn the story of the market. Does it matter if gold goes up another 3 or 4% before it falls 50? No, it doesn't. I'm not making predictions here for the fall. Predictions are, and I do have a price point that I believe GLD will fall to. In fact, with very, very, very high probability, that's where it's heading. But that is for my students and my newsletter, so subscribers. But that is the story of gold right now, and I wanted to share it with you. I hope that it made a lot of sense for you. Those of you that are watching me live, I hope you enjoyed that. This appears to be a better way to watch me, but I hope that the last zoom in really helped that screen share. I hope that it did. Perhaps this was the way to go. I don't know. I hope you were able to see what I was doing. Thanks very much. I hope you enjoyed this live. That was gold. That was the story of the stock market. Join me. Join my system. Contact me. Get your financial plan in place. Do the VIP mentorship. And then subscribe to my newsletter and start learning from someone and with someone and looking through someone's eyes that's been doing this for 25 years, staring at charts 60 to 80 hours a week. I promise you that it will not be a waste of your time. Thank you all very much. And for anyone out there that might be struggling today, to stay happy and keep that mental health clear and excited and positive. We have all been there, I promise you. If you were ever struggling or you're ever upset or you ever need somebody to chat with or talk to, please reach out to me because I have the same struggles as everyone else.